Across the continent, corruption isn't a rumor. It's invoices, shell firms, court stamps. They hid money in safes, not in ledgers, so we opened the files behind the top 10 most corrupt African politicians of all time. Records live longer than influence. Court orders, confiscation ledgers, auditor ticks. Follow the trail. The last border isn't where you think. The top one actually sold through the IMF and looted the money. Now, for the evidence. Our exposé narrator takes you through the records, main, filings, asset trails, and verified documents. Appreciate it, Dr. Komla. Tonight, we open the file on a dossier tracking 10 historic corruption scandals tied to African power brokers. Cash moved in silence, auditors move with louder stamps. Like and subscribe, and before watching through, comment the country you think holds the top spot.
Disclaimer. The mission is simple, neutral, record-driven, cinematic, but factual. The lesson is sharper still. Political corruption and financial crimes never end in wealth that lasts. They end in exposure, sanctions, trials, and seizures. Interpol, the UNODC, and other international watchdogs do not forget. These institutions track records across decades, across borders, and across shells. This is a countdown of exposure and recovery. It is told with short, precise sentences for clarity. The story begins at number 10. The top 10 on the list is Omar Hassan Al-Bashir, Sudan. Corruption and illicit foreign currency possession. Identity line. Head of state at the time. Case spotlight. On the 14th of December 2019 in Khartoum, a special court convicted Omar Hassan al-Bashir for corruption and for holding large amounts of undeclared foreign currency. Police had presented sealed cash exhibits, photographs of safes, and sworn testimony about a presidency-level pipeline of illegal gifts. Snapshot. The pattern was off-ledger cash deliveries and non-bank storage. The status was conviction entered, with inventoried funds seized under court authority. Investigative detail. The case began not with rumor, but with a forced lock. Officers drilled open a safe inside a residence in Khartoum. Stacks of cash were photographed and placed into numbered bags. Custody slips were logged as the bundles moved to the central vault. The first count reached 6.9 million euros in European notes, 351,000 US dollars in cash, and several million Sudanese pounds. Each sum was entered line by line on inventory sheets, signed by both the registrar and the seizing officer. Witnesses spoke of presidential couriers. A cashier described evening drop-offs after private audiences. A protocol aide admitted that visitors left envelopes. A driver explained trips with no manifests that bypassed logbooks. The defense argued they were donations. Currency law experts replied that non-bank storage in those sums was itself illegal. The judgment cited the evidence bags, the chain of custody forms, and ledger entries showing the money never entered the treasury. The court ordered conviction, seizure, and state custody of the sums. Financial trace and beneficial ownership map. The judgment traced no offshore accounts. The file was entirely cash with no proven international trail. Mission recap. The outcome was a conviction under Sudanese law. The seized funds were placed under court control. Detention followed. Statutory penalty was imprisonment with confiscation of the sums. National context. Sudan was in the grip of a currency crisis. Patronage politics favored hard cash over official banking. Asset recovery and sanction status. The funds remain under court control inside Sudan. No repatriation order abroad is noted in this file. Gap clarifier. There is no court-proven offshore layer in this judgment. Sometimes the account is a locked room and the ledger is the evidence tag.
The top 9 on the list is Hosni Mubarak, Egypt, embezzlement of public funds. Identity line, head of state during the period of diversion. Case spotlight, on the 21st of May 2014 in Cairo, a criminal court convicted Hosni Mubarak in the presidential palace's case. The charge was diversion of state maintenance budgets into private residences. In 2015, the judgment stood on appeal, pairing a 3-year sentence with reimbursement and fines. His sons, Allah and Gamal, were co-defendants. Snapshot: the pattern was diversion of public works budgets into private home upgrades. The status was 3-year prison terms and reimbursement of 125 million Egyptian pounds with fines of just over 21 million Egyptian pounds each. Investigative detail: the case began with an auditor. A tick mark on a ledger showed palace maintenance billed to sites not on the official list. Investigators compared delivery slips, purchase orders, and treasury vouchers. Warehouse clerks confirmed that imported marble and wood billed to the presidential stock never arrived. Cross-checks showed the materials inside private homes, backed by contractor photo logs and city inspection stickers. The court added the arithmetic. Square meters of cladding were multiplied by the invoiced rate. Electrical rewiring appeared in work orders. Transport charges were matched to treasury wires. The sum reached 125 million Egyptian pounds in diverted works, with fines of 21 million Egyptian pounds each. Receipts, not rhetoric, sealed the case. Numbered vouchers, contractor memos, and reimbursement entries showed restitution. Financial trace and beneficial ownership map. The flows were domestic. Treasury transfers reached contractors who supplied private sites. No offshore shell was proved in this file. Mission recap: the outcome was a 3-year sentence. Restitution and fines were collected. Statutory penalties under Egyptian law included imprisonment and reimbursement. National context: the post-2011 transition allowed auditors to open dormant files and trace budget flows. Asset recovery and sanction status: restitution was collected inside Egypt. The amounts were recorded in official orders. Gap clarifier: this entry covers only the embezzlement file with final figures. When maintenance builds private walls, the receipts testify louder than witnesses. The top 8 on the list is Teodoro, Nguema, Obiang, Mangwe, Equatorial Guinea, money laundering and embezzlement. Identity line: senior public office holder during the acquisitions. Case spotlight: in Paris, between 2017 and 2021, a Bian Malakis case ended with a conviction. The French court gave a suspended 3-year sentence, a fine of 30,000 million euros, and confiscations valued at 150 million euros. Linked proceedings in the United States added a forfeiture of 30 million US dollars. In Switzerland, seizures and auctions raised 27 million Swiss francs. Snapshot: the pattern was luxury real estate, vehicles, and art acquired through nominees while in public office. The status was a final conviction in 2021, with recoveries in France, the United States, and Switzerland. Investigative detail: the proof began with a deed. Judges in Paris examined the company that held a mansion. The file showed no staff, no revenues, and only decor invoices worth millions. Bank subpoenas followed. They showed transfers from entities that received state money and passed it into cars, villas, and art. In California, a Malibu property was traced through escrow to the same intermediaries. In Switzerland, police listed dozens of hypercars inside a private garage. The vehicles were appraised and tagged for seizure. Court orders listed Ferraris, Bentleys, and Bugattis. The French court imposed a fine of 30 million euros and confiscated 150 million euros in assets. The United States settlement required the forfeiture of 30 million US dollars. Swiss auction proceeds reached 27 million Swiss francs. Attachments were decisive.
They included valuation reports with vehicle numbers, wire receipts stapled to purchase orders, and expert testimony that official income could never sustain these holdings. French cassation judges upheld the judgment. Financial trace and beneficial ownership map. Shell companies in France masked control. A Malibu limited company anchored the U.S. property. Swiss seizures converted vehicles into public funds. Mission recap. The outcome was conviction, fines, confiscations, and multi-country asset recovery. Statutory penalties under French law included imprisonment, a fine, and confiscation. National context. The case became a reference point for how international courts approach luxury assets purchased with diverted public money. Asset recovery and sanction status. French confiscations are held under state control. The United States and Swiss recoveries were dedicated to public programs. Gap clarifier. Distribution of proceeds continues in phases under the statutes of each jurisdiction. Listen, when a mansion reads like a ledger, the front door becomes a courtroom. The numbers rise from here. The methods evolve. The next entry leaves paper and walks into glass, where reflections hide ownership until the light changes. The top 7 on the list is Zine El Abidine Ben Ali, Tunisia, embezzlement, money laundering, and asset concealment, in absentia convictions plus state confiscations. Identity line. Tunisian, 1936 to 2019. Last known jurisdiction was the Jeddah exile. Case spotlight. 2011 to 2012. Tunis. Courts issued in absentia convictions and sweeping confiscations. The state inventory valued companies and properties at 13 billion Tunisian dinars. Foreign jurisdictions froze tens of millions. Snapshot. Indicators and status. Pattern. Public budgets turned into private pipelines via relatives as fronts. Status. In absentia judgments. Broad confiscations. Foreign freezes. Investigative detail. Ledgers showed security maintenance matched to decor at private villas. Luxury goods manifests never reached state stores. The inventory listed hundreds of entities now state-owned. Abroad, Swiss accounts were frozen. Luxembourg charts linked companies to familiar surnames. Deeds showed last-minute transfers. Statements added weight. Consultancy debits cleared in the same week contracts were approved. A security fund paid for a seaside residence. Findings became numbers. Fines in the millions. Confiscations by list. Seizure orders with addresses, vehicles, and shares. Financial trace and beneficial ownership map. Domestic diversions via nominees. Foreign freezes locked multi-million euro and franc balances. Mission recap. Outcome: in absentia convictions and fines, mass confiscations, sustained foreign freezes. National context. Transition favored documentation. The inventory drove policy. Asset recovery and sanction status. Some assets returned, others remain frozen. Gap clarifier. In absentia rulings preserve appeal rights. Valuations are administrative, not liquidated cash. When a regime collapses, the floor plan of its wealth becomes the state's first map. The top 6 on the list is James Onanafe Ibori, Nigeria. Money laundering of public funds, abuse of office. Identity line. Nigerian, born 1959. Proceedings in the United Kingdom. Case spotlight. 2012, London. Guilty pleas brought a custodial term. In 2023, a UK court ordered the confiscation of 101.5 million euros, opening enforcement against assets traced through nominees and property vehicles.
Snapshot, indicators and status. Pattern, state payments echoing into overseas assets via proxies. Status, conviction, 101.5 million euros confiscation, staged enforcement. Investigative detail, a PEP alert flagged wires into thin companies that owned houses and cars but had no business. Investigators tied dates and senders to public contracts. Titles changed in the week wires landed. A mortgage vanished after an associate's transfer. Disclosure peeled back nominees, repeat signatures, email advice that read like routing orders. Confiscation, fixed benefit, and realizable assets near 101.5 million euros. Early tranches in the low millions had already reached Nigeria. Financial trace and beneficial ownership map. Multiple UK accounts, London and Southeast properties via nominees. Ownership inferred through signatures, emails, and synchronized transfers. Mission recap. Outcome, custodial terms served, major confiscation order. Enforcement is ongoing to convert assets into returns. National context, a template for UK-Nigeria cooperation on procurement to property trails. Asset recovery and sanction status. Some assets proceed in phases as assets are realized. Gap clarifier. Appeals and third-party claims slow enforcement. The headline number is the order, not yet cash. Contracts can lie on paper. Bank statements rarely do. If record-driven lists like this one matter to you, tap like and subscribe now. It keeps this work independent and pushes more official files into daylight.
The top 5 on the list is Diepreye Alamieyeseigha, Nigeria, money laundering, false asset declarations. Identity line, Nigerian, 1952 to 2015. The last jurisdiction was Nigeria. Case spotlight, 2007, Abuja. Conviction and forfeiture orders followed an international chase. Domestic seizures paired with UK liquidations of properties brought through shells and aliases valued in the millions. Snapshot, indicators and status. Pattern, overseas buys via thin companies. Sworn forms that omitted major holdings. Status, conviction. Properties and balances forfeited. Liquidations in the millions. Investigative detail. A tenantless London flat drew notice when furniture vans arrived. Title searches led to dormant companies that paid service charges. In Abuja, sworn declarations showed modest holdings. Bank records did not. Dollar transfers hit London accounts days after state disbursements. Utilities were paid from associate accounts. Forfeiture schedules listed parcels and balances. Partners realized properties in the millions. Receipts were land registry extracts, closing statements, and a certified inventory. Financial trace and beneficial ownership map. UK properties via shells and assumed names. Domestic accounts fed foreign purchases. Ownership inferred from payments and control. Mission recap. Outcome, conviction and sentence. Forfeiture of enumerated properties and funds. Foreign liquidations coordinated for return. National context. A formative file for Nigeria's anti-corruption playbook. Asset recovery and sanction status. Sales and transfers recorded. Realized sums in the millions returned or queued. Gap clarifier. Not every foreign asset used the same form. Timelines are staggered. A disguise can beat cameras. It cannot outlast ledgers. The top 4 on the list is Frederick Chiluba, Zambia. Civil fraud and misappropriation. UK High Court restitution. Identity line. Zambian, 1943 to 2011. Last jurisdiction was Lusaka. Case spotlight. 2007, London. A civil action by Zambia's Attorney General yielded liability for siphoning via a covert labeled account and restitution of nearly 46 million US dollars. The targets were London conduits and receipt-backed spending. Snapshot, indicators and status. Pattern, security-coded accounts used as private reservoirs, luxury purchases from state funds. Status: UK civil judgment final. Recovery followed the civil route. Investigative detail: the Special Operations Ledger carried tailor bills, boutique invoices, and withdrawals timed to West End shopping. Subpoenas opened intermediary accounts. Managers described cash drawn just below review thresholds. Letters sat beside receipts. An authorization the morning a till receipt printed. A courier delivery minutes after five-figure cash left the counter. Under the civil standard, more likely than not, emails, handwriting, and bank logs closed the loop. The schedule read like a bill, about $46 million ordered back with interest and enforcement instructions. Financial trace and beneficial ownership map. A UK orbit of pastor firms. Spending traced to boutiques and tailors. Links established by signatures, timing, and cash custody. Mission recap. Outcome: conviction and sentence. Restitution ordered and enforced. Recovery actions extended beyond the UK. National context: a civil court abroad turned receipts into restitution when criminal proof failed. Asset recovery and sanction status: sales and transfers recorded. Realized sums in the millions credited toward the order of $46 million. Gap clarifier: dual outcomes require care. We rely on the enforceable civil judgment. When criminal law cannot climb the wall, civil law opens a door and walks out with the receipt book. Method note: amounts mirror judgments and orders. Only final, proved figures appear.
The final stretch tilts the scale from headlines to ledgers. Commission reports that read like spreadsheets. Civil forfeiture schedules that liquidate yachts and penthouses. A decades-long repatriation pipeline turning secret accounts into public money. Records, not rumors. Figures, not adjectives. The top three on the list is Yahya Abdul Aziz Jammeh, the Gambia. Diversion of state revenues, commission findings, plus foreign seizures. Identity line: Gambian, born 1965. Last known jurisdiction was exile. Case spotlight: 2017 to 2019. Banjul. The Gambia's Jammeh Commission traced presidential withdrawals and front company diversions, quantifying losses in multiple currencies. At the same time, authorities in the United States seized a Potomac, Maryland mansion purchased with diverted funds. Snapshot: indicators and status. Pattern: cash lifts from the central bank. Telecom gateway revenues diverted off budget. Charitable fronts used as collection buckets. Status: commission findings adopted by government. Asset freezes and seizures enacted. Foreign confiscation of a United States property valued in the low to mid seven figures. Investigative detail: the ledger began in the vault. Clerks retrieved withdrawal slips labeled Presidential Directive, replacing budget codes. Gambian Dalasi bundles were signed out on Fridays, reconciled only by a closed signature loop. Auditors matched slips to foundation accounts bearing presidential initials. Telecom logs showed revenues that should have landed in the central account, routed through a private custodian. Totals recorded in hard figures. At least 1.065 billion Gambian Dalasis, $304 million, 1.42 million euros, 30,000 pounds sterling, 2.25 million Saudi riyals. Photographs of withdrawal forms, stamped bank statements, and cross-referenced bill of lading numbers for imported vehicles provided the receipts. Abroad, the Potomac House reflected the same misuse through title records, escrow instructions, and intermediary wires. Financial trace and beneficial ownership map. Gateway fees flowed to intermediary custodians, then into personal and foundation accounts. Central bank lifts became cashier's checks, funding vehicles and real estate. The United States property sat in a limited liability wrapper with control traced through payment instructions. Mission recap. Outcome: government adoption of findings, domestic asset freezes and seizures, foreign confiscation of United States residents and associated proceeds. National context: a small treasury magnifies every diverted unit.
The commission professionalized memory by stapling signatures to sums. Asset recovery and sanctions status. Domestic realizations and sales booked returns in local currency. The United States property and related proceeds were forfeited under foreign supervision. Gap clarifier. These are commission findings, not criminal convictions. Appeal rights remain on specific seizures and valuations. When a commission audits a presidency, every Friday withdrawal becomes a page number. The top two on the list is Diezani Alison-Madueke, Nigeria. Foreign bribery proceeds, money laundering, civil forfeiture, and ongoing prosecutions. Identity line. Nigerian, born 1960. Last known jurisdictions were London and Abuja-linked proceedings. Case spotlight. 2017 to 2021, United States. Civil forfeiture complaints targeted over $144 million in assets linked to bribery proceeds. Court-supervised sales included a super yacht and high-end real estate, realizing over $50 million in cash. Parallel criminal proceedings continued in the United Kingdom with additional restraint orders. Snapshot. Indicators and status. Pattern. High-value property, luxury goods, and yacht financing routed through associates companies amid oil sector influence. Status. United States civil forfeiture final on multiple assets with realized multi-million-dollar proceeds. United Kingdom criminal case active with asset restraints. Investigative detail. Bankers flagged transfers described as consultancy that settled into escrow on trophy properties within days. A 65-meter yacht was financed through special-purpose entities. Court-ordered forfeiture converted bright work and steel into quantified restitution. Manhattan apartments showed purchase prices far beyond declared income. Sales under court supervision returned 8-figure sums. Complaints attached exhibits. Email threads mapping appreciation to asset purchases. Wire confirmations mirroring oil deal payments. Import declarations for watches and art. Civil orders translated the narrative into a balance sheet. A yacht sale clearing north of $35 million. Apartments realizing tens of millions of US dollars more. Proceeds banked to government-controlled accounts. Oil contract adjacency led to associate-controlled special-purpose vehicles, then escrow and titles for United States properties. The vessel finance loop flagged transfers and forced sale. Beneficial control inferred from communications, payment approvals, and possession. Mission recap. Outcome. Multiple United States civil forfeiture wins translating into liquid funds. Ongoing United Kingdom criminal proceedings and restraint orders. National context. Bribery proceeds can be attacked even when criminal trials take time. Civil courts convert allegations into enforceable cash. Asset recovery and sanctions status. Net proceeds from sales directed to public benefit channels under court authority. Further sums pending United Kingdom case outcomes. Gap clarifier. Civil forfeiture is not a criminal conviction. Figures reflect realized sales and final orders only. If you can appraise it, a court can auction it and wire the balance to the public. The top one on the list is General Sani Abacha, Nigeria. Grand corruption, international asset concealment, and multi-jurisdictional recoveries. Identity line. Nigerian, 1943 to 1998. Head of state from 1993 to 1998. Jurisdictions engaged included Switzerland, the United States, Jersey, Liechtenstein, Luxembourg, and the United Kingdom. Case spotlight. 2005 to 2024. Abuja, Bern, Washington, St. Helier. A 2-decade repatriation pipeline returned over $3 billion in Abacha-linked assets to Nigeria. Packages from Switzerland exceeded $500 million. A Jersey transfer in the mid-300s of millions. United States forfeiture orders exceeding $480 million. Additional releases arrived under mutual legal assistance. Snapshot. Indicators and status. Pattern. Cash extractions are laundered via numbered accounts, front companies, and back-to-back instruments across European banking hubs. Status. No criminal conviction against the deceased. Civil and forfeiture orders plus intergovernmental agreements returned billions to Nigeria. Investigative detail. Mutual legal assistance letters reference account codes, not names. Banks responded with spreadsheets under ciphers. Prosecutors verified beneficial ownership through arithmetic and timing. Early Swiss packages surpassed $500 million. United States forfeiture orders exceeded $480 million. Swiss returns listed $321 million. Jersey released just over $300 million. Smaller rounds from Liechtenstein and Luxembourg completed the network. Each tranche carried certified ledgers, SWIFT printouts, and monitoring annexes linking funds to projects. Recovery followed a strict protocol. Name the account, win the order, release balances, publish receipts. Financial trace and beneficial ownership map. Numbered accounts in Switzerland and Luxembourg funneled to shell conduits, then correspondent banks in London and New York. Recovery reversed flows via court orders and bilateral agreements. Beneficial ownership confirmed through signatory patterns, transfer timing, and seized correspondence. Mission recap. Outcome. Cumulative repatriations above $3 billion. Monitoring frameworks attach funds to public expenditure. National context. The canonical African kleptocracy file became the canonical African asset recovery file. Institutions learned to outlast estates. Asset recovery and sanction status. Tranches booked. A 2005 Swiss package worth above $500 million. Rounds between 2014 and 2017 in the hundreds of millions. A 2020 Jersey transfer just over $300 million. Ongoing mop-up in smaller jurisdictions. Gap clarifier. The principal died without a criminal trial. Figures reflect only final orders and completed returns. The most powerful receipt in anti-corruption is a repatriation credit stamped value date today. This investigation cuts through headlines in Intel. Subscribe and enable notifications for court-verified updates. Drop "Track the returns" in the comments for a follow-up scoreboard of recoveries and repatriations only. Like and share to raise evidence-based reporting above speculation. Transparency, deterrence, and civil discussion remain the goals.